do you want to live in your parents' basement, watch Netflix, and order Domino's pizza the rest of your life? If so, the CPI is relevant to you. The mobile payment space is particularly promising because all these mobile applications are one step removed from being mobile banks. And there's no reason why, Facebook and Apple and Google and the like don't eventually become mobile banks. Like, it was a matter of time before they let you send photos. And then at some point they decided to let you send videos. And then they decided they give you emojis. And then they decided they'd let you send audio files. And in a way, you could think of Bitcoin, as just another file type. Everything that humanity's done in the history of the human race is predicated upon those space-time constants being what they were. And when you decide to routinely change them, you're playing God. The key is the base layer of Bitcoin is like the granite underlying Manhattan. We're in a gold rush right now, Bitcoin rush, call it. And so what's going to happen is $1 trillion worth of Bitcoin is going to grow to be $10 trillion. And gold's going to return to its ornamental value as a source of jewelry and the like. Our strategy is to acquire and hold Bitcoin. We're a property development company, almost like a cyber REIT. Bitcoin is hope. Hope to fix your business, hope to fix your family balance sheet, hope to fix your country. If you want to preserve your wealth, you spread your bets around. But if you're going to diversify in this environment, I think you want to diversify into scarce assets that cannot be devalued based upon currency expansion. The only use of time is, how do I buy more Bitcoin? Nothing else matters. Every dollar that's not invested in Bitcoin is dilutive to your opportunity, and every dollar that's not beating the S&P is dilutive to your wealth. We just finished discussing the proof of work mining network and the 7 layers of security: energy, technology, politics, finance, the network itself, the spatial security, the temporal security. So what you have is you have Bitcoin as a decentralized crypto asset network. And the thing that pops up a lot is the question of, what does energy usage look like over time? And is energy usage going to keep increasing as the price of Bitcoin increases? And I've seen commentary on this. I think a lot of people get it wrong. They seem to think that as the price of Bitcoin increases, the energy usage will increase linearly. And if there's a 100x increase in Bitcoin price, there's a 100x increase in energy usage. And I think it's just worthwhile to make the observation that over the past 10 years, the mining network has gone from being energy intensive to being technology intensive. It's a paradigm shift, the first idea in 5,000 years. It's compressed air. It's electricity. It's hygienic running water. It's something new and different. If you don't understand it, then you should go and study it. You should study it because it is, in essence, strong money on a crypto network, and there's no reason it can't flip gold and go to 10 trillion and then replace most debt as a store of value and go to 100 trillion. And if it does, it's going up by a factor of 100. And if you miss it, it will be the greatest opportunity of your lifetime, and you will have missed it because you were too lazy to do the work. I would say the logical thing to do in business is you don't worry about what happens 16 to 20 years out. If you can make a ton of money now, and so economists and politicians and investors, they all lack the right mental model to understand Bitcoin. You know, I changed the speed of light and the speed of sound, and I quintupled gravity. Digital energy is the technical metaphor that says this is the technical imperative for Facebook and Google and Apple and everybody with a computer, programming capability or a CPU chip. Digital property is a macroeconomic metaphor. $100 trillion is going to flow out of real property to digital property. Bitcoin transcends any company, any CEO, any country. It's spreading everywhere, and it truly is the most successful decentralized technology. There's nothing better to buy. There's nothing better to buy, right? I mean, I'll say it a third time. There's nothing better to buy. The result is the Bitcoin network will shift to the west. It's a benefit and a windfall for the rest of the world. It's good for Africa. It's good for South America. It's great for North America. It's an opportunity for progressive miners. It's an opportunity for progressive politicians and political jurisdictions. Texas wants the mining. Why wouldn't you want the mining? This Bitcoin mining is the highest value and use of intermittent or stranded energy of any industry in the world. Bitcoin is a successful proof of work network that has created our first digital money. Bitcoin has done that. We can see that. There are no successful examples of a proof of stake network succeeding as digital property. Okay, again, give me an example of anything this scale that ever grew 400% a year. And in terms of inertia, the $1 trillion is $1 trillion of monetary energy. That means you've got more than 100 million people that have $1 trillion invested in this brand. This is the only brand in the history of the world. It's $1 trillion brand, right? It's like think about the value of Coca-Cola as the brand. In the minds of 100 million plus people, you have this idea and it's worth $1 trillion. How are you going to rip that idea out of people's heads? Bitcoin's not going to spring a leak. You know, there's not going to be a property tax. You don't have a maintenance charge. It doesn't spring a leak. It doesn't burn down. February 8th was like a big date when Tesla announced they bought $1.5 billion of Bitcoin. Now this started hitting in the New York Times, the Wall Street Journal. It started showing up in Fortune and Forbes and everywhere in the world. And people said, well, maybe there's something here. We got to pay attention to this. Now, you know, generally, politicians and conservative large bureaucracies will be the last to embrace this. But it ripples, right? From the visionary entrepreneurs to the early adopters to the macroeconomic investors to other investors to, you know, first the techno media, then the mainstream media, then sparks fly, a little bit of smoke, a little bit of controversy. Now you got to have an opinion. And it's going to be injected into consciousness. I think this is part of the healing process of a free market. The right way to think is, again, it's electricity. Every business in the world didn't have electricity in 1900. And ask yourself the question, what happened to the companies that adopted electricity? And what happened to the ones that rejected electricity? You're seeing the bigger banks, Goldman Sachs, you know, and Morgan Stanley and others getting involved. The Bitcoin derivatives market is growing. Right, so this is the most successful thing ever unleashed in the history of humanity from an economic point of view. So I think that as time goes by, there are just more and more ways to buy Bitcoin and buy instruments and financial products that are backed by Bitcoin. All of those are going to create more demand for the underlying asset. Right. And first we did a $250 million purchase. This is just technology. It's better technology. All you got to do is buy it and wait. What's the property that I can trust, right? And the answer is Bitcoin, because it is truly decentralized and it is homogeneous, and yet it has been anointed as property. It's a safe haven. The IRS says it's property. The SEC says it's property. And I'll make one last point, Ro. It's fungible property across time and space. For example, one Bitcoin equals one Bitcoin today. And if I decompose it to 100 Bitcoin, 1 million Satoshis, and put it back together again, I've still got the same thing. And at the same time, one Bitcoin in 10 years is going to be one Bitcoin. It's going to be the same quality. It's going to be 1/21 millionth of all the monetary energy in the network forever. That's not the same with your house. If you bought a lake house on Lake Tahoe, to Airbnb it out, in a decade, it may not be as high a quality as today. You have to invest huge amounts of maintenance to maintain as new. Even if you do that, it's still going to be dated in 30 years. There's no way to avoid the property. Maybe you bought the most beautiful lake house in Lake Tahoe, and in 30 years, someone builds a condo next to it because some politician rezoned the land to your left and your right, and nobody wants to stay in your lake house if it didn't sink into the water, if something else didn't happen, even if you're the perfect landlord. A lot of people that own Bitcoin in China had to sell it in a hurry, so they had to take a haircut in order to liquidate their Bitcoin and convert back into RMB, and that caused volatility in the market. I think that the right way to think about Bitcoin is, and people get this wrong all the time, Bitcoin's not a stock. Bitcoin is a bank. Because what you're going to see is $200 trillion of money drain out of land and stocks and bonds and currency and collectibles. And when when we demonetize $400 trillion worth of property and half of it flows out, and it's just like we took the information out of the books and libraries, we took the music out of the orchestras and the pianos and the CDs. What happens when we take the money out of the property and we put it into the Bitcoin blockchain, and then we hand that to technology companies to do with as they will? First of all, Bitcoin is the solution to the problem because it is the apex property. You can't inflate it away. It's a global monetary network for people that want to store their economic energy for the next 100 years. So ultimately, the Bitcoin price will be volatile. I watch it. If a decade from now it didn't go up, it won't have been the best strategy. But what it does day to day, week to week, month to month, even year to year, isn't really that relevant. We have a long-term strategy here. If you want to give music to 8 billion people, you got to give them digital music. And if you want to give education to 8 billion people, you need to give them digital books and digital education. And if you want to give wealth to 8 billion people, you need to give them digital property. So Bitcoin is profound in the same way that streaming music and YouTube is profound and iBooks is profound. Except that those things I just named created trillion-dollar companies. Facebook, Google, Amazon, Apple all became trillion-dollar companies because of digital books and digital education and digital music. Digital property is 100 times more important. This idea that I can have a pure, pristine property in time and space that I can decompose and recompose, that I can oscillate, that I can program, this is unique in the history of the world. There's nothing comparable to this. And we have not developed this. This is property that anybody with a computer can develop. I can write a computer program to move this stuff around. Some kid in Zimbabwe can write a computer program on an Android phone that can create value from your digital energy or your digital property. Digital money, that's the political metaphor. It torques off all the politicians and all the mainstream and everybody that doesn't understand it, and they just get all worried, it's going to topple the government or it's going to undermine the status quo. So if you leave that and you say it's digital energy, it's just energy with a half-life of 1,000,000 years that you can oscillate at 60 megahertz on a mobile phone for 8 billion people. It's digital property. It means every middle-class person can store their life savings in property and get yield on it from the highest bidder everywhere in the world every second of the day, and they don't have to stress out about the property burning down. When you understand those two things, you step back and you say, what am I going to do? And the answer is, I'm just going to own it. Just going to own it, man. Just buy it and let everybody else figure the stuff out. 100,000 entities are going to come up with a way to utilize digital energy or develop digital property. Just own it. No CEO, no board of directors, no product, no iPhone. There's no employees, so there's no one to unionize. You don't need an iPhone 12 to be competitive because the product of Bitcoin is just the Bitcoin. And if Bitcoin just gives you 1/21 millionth of the network now, it's quite reasonable that 1/21 millionth of the network in 100 years is just as valuable, probably more valuable than one Bitcoin in 100 years is more valuable than one Bitcoin today. But you can see that one iPhone One iPhone 3 today is worth nothing. And one iPhone 12 in 100 years will be worth nothing. So the product that Apple is selling isn't going to last 1,000 years. The product that Bitcoin is selling is 1/21 millionth of all the money in the world. That doesn't have to change. It just kind of has to not break. So what I liked about Bitcoin was it was a digital gold or a digital property that you couldn't inflate. And it was on a big tech network that you could accelerate using computer technology. So call it digital gold without all the imperfections of gold, but the big tech element meant that you could plug layer 2 and layer 3 applications into it, like Square Cash, Lightning, Apple Pay, Google Pay. And if I plug applications into the Bitcoin network, then I can create smarter, faster, stronger gold. It's like, if you could buy 50 blocks in Manhattan 200 years ago, there's no way you wouldn't have made money unless someone called your loan and liquidated you out and you had to sell at some time in the last 200 years. So you just want to have the staying power to stick around for the long term and let nature run its course. Ideal money is a shared, immutable, correct ledger. You've heard the phrase, Bitcoin is a shared, immutable ledger, and people debate about whether it's truly immutable or not. But a crypto asset network, fully decentralized and mature, is the closest thing we can get to an immutable shared ledger in the history of the world. $7.8 billion people are using toxic currency to store their value. I see some numbers showing about 110 to 120% annual appreciation a year. And that's 10 times better than the S&P. So I think that's the best performing asset class. But, depending upon what dates, if you pick a different 10-year date, you might get a different number. And Bitcoin is this paradigm shift where we have digital money crashing into, I guess, what we'll call an analog money, or maybe a political money is a better way to describe it. And now we start to ask the question again, what is money? What is the right focus and what is the right frequency? So in terms of making economic decisions, I think the right frequency is annually, 1, 2, 3, 4, 5, 6, 10 years. Look at blocks of time like that. Looking at the frequency and the volatility and the returns or metrics on assets by the minute, by the hour, by the day, by the week or by the month, even by the quarter, are all kind of noisy. Likewise, I wouldn't look at 100,000 little minute assets. I would look at $1 trillion blocks. So there's $1 trillion worth of Bitcoin. It's up 582% over a year and 200% on average. Compound annual growth rate, 200% for a decade. Those are two numbers that are valuable. There's 10 trillion in gold. It's up 2% this year and 2% on average every year for a decade. Just stop right there. That's a big insight. You can measure 1 million statistics of Bitcoin and gold, every second. They don't matter. What matters is one thing is appreciating at 2% a year and the other is appreciating at 200% a year. If you think about it, you've got pronouncements, the president of Turkey says stuff about Bitcoin. People are asking the premier of Russia whether they'll accept Bitcoin. People want to know from central bankers what they think about Bitcoin. When's the last time somebody asked the government their opinion of Apple stock, or whether you should invest in gold or silver or any other stock or options trading, or whether you should put your money in a money market? Nobody cares about any of those things. The only thing they care about is Bitcoin. Bitcoin is sucking the oxygen out of the room. And good news is good news, and bad news is good news. And as long as you keep talking about it, it's a good thing. So now you have the entire government, in essence, saying, it's just so good, we're a little bit afraid of it. And then you have people like the Ray Dalio saying, yeah, well, what's your problem with it? Well, it's just so perfect that I'm sure that somebody will want to stop it or ban it because it's too perfect. But certainly, I think for Bitcoin, I really do believe that the more people talk about it, the better it is. You can't buy this kind of publicity. And that's the only strategy. I fall in the category of people that thinks the Bitcoin network is already good enough to hold $100 trillion worth of monetary energy, and we should make it better carefully and in a responsible fashion and prudently. And yeah, it should upgrade, but it doesn't need to go fast, and it's not needful of anything to be successful. So I wouldn't rush it, but I wouldn't stop it either. I would just be very careful in moving forward. I think the single most important thing to understand about Bitcoin is the first decentralized, truly digital property in the history of the human race. Bitcoin is a bank in cyberspace with no more than 21 million units. If you don't have a large asset portfolio, then you can't keep up with, you can't maintain purchasing power to buy the things you want in the future. if those things are assets. And of course, they probably are. You probably want a nice house. You probably want cool things that are scarce. So this is why after the lockdown, it became very important to understand finance. You have to become much more financially sophisticated. It took the human race 100,000 years to figure out fire. So like that was a slow thing. I think it took the human race 20 years to figure out electricity, or 30 years. I don't think Bitcoin will take 30 years. I think information's spreading faster, but maybe it takes another decade. What matters? What matters is when someone shows up with $20 billion and they want to buy Bitcoin, that matters. What happens, if Tesla buys 10 billion Bitcoin instead of 1 billion or 1.5 billion? That matters. Is that in your model? No, it's not in the model because no one ever did it before this year. If you know anything about tax, you know that when you move a currency around, you can't afford to incur a tax obligation. So if the IRS is going to tax you when you transfer $1 million of Bitcoin, then it makes it utterly impossible to use it as a currency. The strategy is acquire and hold Bitcoin. I think that this is just part of the continual trend of companies adopting Bitcoin as a treasury reserve asset. The way you get yourself in trouble with financing is you basically take a margin loan that's marked to market every minute of the day, and you have to post additional collateral if you fall below that margin. We don't have any of that financing. We have mostly equity, convertible financing, which is unsecured. Because the macroeconomics are very favorable, right? We know we're going to continue to expand the money supply in dollars and euros and everywhere else in the world. The technology dynamics are very favorable. We keep improving Lightning apps, Square, Cash App, mobile apps. You've got these, like BlockFi's got a credit card and it gives you Bitcoin as 1.5% cash back. Call it Bitcoin back. So all those things are rolling out, and as those things roll out bit by bit, the entire asset class will just get more energy flowing into it. I think that if you want to characterize crypto universe, you have one thing, Bitcoin, which is the dominant trillion-dollar crypto asset network. And so if you really want to maximize your opportunity, you want to move as much of your liquid capital as close to Bitcoin or the Bitcoin network as possible, because it is this monetary network that's going from $1 trillion, and presumably it could be worth 100 trillion or more, because the sum total of all money in the world is maybe $400 trillion worth of stocks, real estate, bonds, and the like. Half of that is looking for a store of value, and the other half honestly truly wants to be invested in stocks or bonds or real estate. We've lost price discovery in the financial universe. So the single most accretive way to use money or time is invest in Bitcoin, because you've got a once in a lifetime, once in 50 years, transformation where all of this $200 trillion of money sitting in analog fiat instruments is being encrypted and converted into a digital instrument, which is thermodynamically superior, right? That's the first observation. Time is money. Convert your money into Bitcoin or something as close to it as you can. And the second is time. Well, any time you're spending analyzing, it's like go to Venezuela, analyze every company, every piece of real estate, every bond index in Venezuela, and figure out which ones you want to invest in. And the answer, Angelo, is it's all a waste of time. There is no property invented in the history of mankind that is better than Bitcoin. It's better. I mean, it's better than owning, the center city blocks of the greatest cities in the world. This is like Manhattan in cyberspace. One day 1 billion people will live there, then one day 5 billion people will live there. So I'm telling you, 5 billion people are going to want to own property in cyberspace. There's only 21 city blocks. How long are they going to want to own that property? How about like 1,000 freaking years? Bitcoin will continue to appreciate more aggressively than other asset classes because it's the technically superior property. The best thing to do is if you're not going to hold it for 4 years, don't buy it at all. because if you're thinking shorter than 4 years, you're kind of more either a trader or a speculator. The best period is forever, and if you can't be forever, look out 10 years, and then you won't have the anxiety. But I wouldn't invest in a Uniswap any more than I would invest in an individual stock. Like I'm not buying, fill in the blank Uber stock. If you have like a SoftBank and maybe you would invest in Uber or Airbnb, maybe you would invest in, a mega unicorn, a big thing in the crypto space. You got to analyze it, right? Uber had regulatory issues. Airbnb had regulatory issues. A lot of crypto things have regulatory issues. I know I have a pretty good feeling for what the regulatory uncertainty is around digital property. Like, am I confident I can buy $1 billion of Bitcoin and hold it for a decade? Yeah. Can I move $1 billion of Bitcoin and not pay tax on it and not KYC it? Probably not. Is that clear somewhere? Not clear everywhere. Do I want to test that? Not really. So if you're a crypto venture, if you're a venture capitalist and you're a startup, you go the application route. And if you're a big mezzanine investor, crypto investor, and you have a higher risk tolerance and you have more capital, maybe you look at some of the bigger cryptos and the platforms. If you're a insurance company and you sell life insurance policies, and you have $100 billion worth of money in sovereign debt that's currently yielding 2% interest, and you're thinking the negative real yield is -5 or -7, maybe you want to move $5 or $10 billion of that into digital property like Bitcoin. So I wouldn't make my decisions based upon decisions that take place in China or India or Nigeria. I'd make my decisions based upon the prevailing view of the regulators and the society in the Western world. And I think that's come down very hard on one point. Bitcoin is property. Bitcoin is not currency. It is not a medium of exchange. The medium of exchange function is sitting with the fiat currencies, the euro and the dollar. The store of value function is migrated into property like gold, S&P 500 index, real estate, and Bitcoin and other sorts of things you can own. And I think that's a very stable, logical development for the society. Right? Alpha, how about Arabic numbers? Been around for quite a while. A protocol can last a long, long time. So we've got this issue of, is it long duration? Yes. Is it high quality? Yes. When should you ever sell an asset? The theoretic, and this is why people like the models are all just misleading people to make awful dilutive decisions, destroying their wealth. The only time you should sell an asset is when you have knowledge it's going to be impaired, right? You can't take it with you. It's going to be impaired, and you can't finance it to buy the next asset. Well, this is not going to be impaired. This is property in cyberspace, right? And there's nothing better to buy. There's nothing better to buy, right? I mean, I'll say it a third time. There's nothing better to buy. I think that if you want to characterize crypto universe, you have one thing, Bitcoin, which is the dominant trillion-dollar crypto asset network. It's in essence, if God created gold in cyberspace, he would have created Bitcoin. It's gold in cyberspace, but it's got none of the liabilities and defects of gold. It's an encrypted block of sunlight. You can move it at the speed of light. You can program it with 1 million transactions a second. You can use it as the base layer for the 21st century economy. It's completely transparent. You can't make any more of it. It's capped at 21 million. You can take delivery of $1 billion of it in the palm of your hand or hold it in your head. Okay, so never in the history of the world did we have such a pure form of monetary energy. Right, the dollar weakened by enough to drive the stock indexes up by 38% this year instead of 10%, which is the average over 100 years. So and pretty much the core principle of how you get rich or how you stay rich in the 21st century is you dematerialize something from the physical world to the digital world, and you make it smarter, faster, and stronger. I feel that Bitcoin is like fire or electricity. At the end of the day, there's 21 million Bitcoin. If $1 trillion is invested in Bitcoin, that tags Bitcoin at about $50,000 a coin. When someone buys another $1 trillion worth of it, the price is going up, and then the price is going up based upon the rate of monetary inflation because it's the safe haven. So if you're buying something which is potentially going to last hundreds of years, and there's nothing better on earth to buy, why would you ever sell it? So if a company adopts Bitcoin as its reserve asset, then the stock starts to be backed by the Bitcoin. So the best way to think about this transition is companies start to buy Bitcoin as their reserve asset, and then they have stocks that trade as derivatives of the Bitcoin. And then small countries buy Bitcoin, and then they have a currency backed as a derivative of the Bitcoin. And then larger countries And over time, you would just think that Bitcoin becomes a larger and larger asset class. It goes from $1 trillion to 10 trillion to 100 trillion to 200 trillion. And yet the myth of gold as immutable money, right, or the sovereign store of value, it stayed with us for thousands of years into the 20th century. I would say that the gold standard has been dying a slow death, a death by 1,000 cuts. 1914 comes along. You know, we've got the golden age from whatever 1870 to 1914, but then World War I comes along, and then in 1914, every country abandons the gold standard, and maybe that's the final cut. You can't succeed in business, and by the way, you can't succeed in life if you don't actually create an asset portfolio of high quality assets that will appreciate in value faster than the rate at which the currency weakens. We buy 1 billion more Bitcoin. And so today, you know, where does that end us with? Well, so today we have nearly $5 billion worth of Bitcoin. And if the money supply expands at 20% a year, that means we have a $1 billion investment gain a year. And we don't have to live in fear of the money supply expanding, because we have actually converted our company from asset poor, in essence, from a bunch of people in one of those galleys where everybody's rowing as hard as they can, dragging a 500-ton weight behind you. And we've converted ourselves into a clipper ship where nobody's rowing. Well, we're still rowing a little bit, but we're rowing with the wind now, and we've got the sails up. And if the money supply expands at 10% a year, then that's worth 500 million a year. And it expands at 20% a year, it's worth $1 billion a year. And so the strategy in essence is you can't create or protect shareholder value unless you deploy your assets in a creative fashion in the face of monetary inflation.